There's a lot of business turnaround artists out there, but I'm the only one putting up his own money.
Hi, everybody. Welcome to On the Money. I'm Maria Bartiromo. The market does something it hasn't done all year. Volatility comes back to stocks. Why everybody is watching interest rates and how to keep your money safe right now. The fight over immigration moves front and center. I'll talk to a former technology CEO who was himself an immigrant, why he says Washington's approach is all wrong, and that his incredible success story could never happen today. And the next big thing in smartphones, the secret motive behind Google's new billion-dollar buy and mapping the future with an industry insider. On the Money begins right now.
This is America's #1 financial news program, On the Money. Now, Maria Bartiromo.
Here's a look at what's making news as we head into a new week on the money. It was a wild week for the markets. The Dow Jones Industrial Average had its first three-day losing streak of the year after a spike in interest rates for the 10-year bond and big losses in Japan. That made investors very nervous. But things bounced back on Thursday with a nearly 200-point gain on Thursday in hopes that the Federal Reserve will not slow down its bond buying program anytime soon. But the markets fell back again on Friday. Retail sales for the month of May came in better than economists expected, rising 0.6%. With strong auto sales. Important because consumption contributes to GDP and makes up more than 2/3 of the U.S. economy. America is on track for its smallest deficit in 5 years, the Treasury Department saying that the shortfall for the first 8 months of the fiscal year totaled $626 billion. That is a fall of more than 25%. It's part of the reason that Standard & Poor's raised its credit rating outlook on the U.S. to stable from negative. And Apple polishing up its product line. The company introduced a new version of its mobile operating system at the annual developers conference. The software will be released this fall and will include easier photo sharing, improvements to its Safari browser, and to its Siri voice activation software. It's a nervous week for the markets for sure. The Dow's losing streak, bond yields rising, worries about the Federal Reserve. So what to do? Should you stand pat, make moves in your portfolio? Joining me right now, Rebecca Patterson, Chief Investment Officer at Bessemer Trust, and Jason Trennert, Chief Investment Officer at Strategis Partners. Good to see you both. Thank you so much for joining us. So let's talk about this week, Rebecca. It felt like there was a change in sentiment this week. All of a sudden now we know the Fed's going to stop at some point, but really volatile markets. Up 200, down 200, then a big bounce back on Thursday. Were you surprised at the volatility this week?
A little bit, yeah. I mean, we all knew this day would come, but we never knew exactly what it would feel like because we've never lived through anything like this before. The quantitative easing, the monetary policy we've seen in the U.S., across Europe and Japan is something there's no precedent for. So we knew there'd be some sort of market reaction when the tone finally started to change, but this was probably bigger than most people expected.
What does the world look like, Jason, when the Federal Reserve does, in fact, make the announcement? Now, the Fed's meeting next week. I don't know if we'll hear it next week. But what happens when, in fact, we know that the Fed is not going to be buying that $85 billion in bonds every month?
I'm really not particular. It depends on why. If it's not going to be buying the $85 billion because real growth is getting better, then that's not a problem. Then that's going to be associated with higher earnings, and I think the market, stock market in particular, will deal with it with equanimity. If it's because inflation's getting out of control, that would be a very different story because that would suggest that interest rates, Fed's lost control, interest rates would be back up. The good thing is that inflation is coming down, and inflation expectations are also coming down. So I'm really quite bullish.
And I'd just add to that, the U.S. consumer, despite higher taxes, despite fiscal tightening, is showing amazing resiliency, relatively speaking. You know, retail sales have held up pretty well, consumer confidence has held up pretty well, and that's coming from wealth effects, as we've all discussed before, from both equity markets and from housing. And I don't think either of those are going away quickly.
I want to get your take on the economy, broadly speaking, where the strength is, where the weakness is. Listen to what Jack Welch, the former CEO of GE, said earlier this week.
Things aren't bad. I mean, things are not bad. I mean, this is a 2% economy. This is not a disaster by any means, but it's a 2% economy, and we're not going to create enough jobs with this level of economy to get out of the sevens.
So 2% economy. Do you think the market is ahead of itself, knowing that we're in a 2% grower?
Personally, I don't think so, because the phrase we've been using is Tina. There is no alternative. Right. And I think that I also agree with Rebecca that you're not in a situation where you're going to be getting very high real rates from bonds. I think the backup in bond yields actually was a very good reminder that you could lose money, particularly in bond funds. So it's a very strong environment, I think. It's a very strong reminder that equities are a very important part of the total return that investors are seeking.
And I think one of the good things that he said about unemployment rate and it not coming down quickly, consumers doing well, businesses are still cautious though. And again, we're in a global economy and a lot of U.S. companies today depend on sales overseas. The U.S. is doing better, but overseas, Europe is still struggling to exit recession. China's economy is maturing, growth rates are slowing. A lot of emerging markets are facing some pains right now, Brazil in particular. And so even if the consumer is doing better, overseas is still a little bit tricky, and that feeds through and affects the corporate sector more than the consumer sector.
But let's talk about the Fed. They're meeting next week. What are you expecting to come out of that meeting?
What I'm hoping to see from that meeting is Fed Chairman Bernanke trying to calm things down. He's not going to say, don't worry about it, we won't exit QE. He's not going to go that far. They don't want the market to get too one-sided. So my hope is that he says it is coming, but it's going to come slowly, it's going to be gradual, and just calm the market down. That's the best case scenario for me, and I think it's likely.
What do you think, Jason?
I think Rebecca's right. I think, listen, I
That's
think
why I spoke first.
Well, Rebecca, I think Bernanke's been the most transparent central banker of all time.
Yeah.
And I think there's a lot of people that do what I do that try to make things complicated to make themselves useful. But I think he's telling you, he's giving you the playbook.
Right.
And he's telling you 6.5% unemployment rate is one of the markers they're going to be using. 2.5% inflation is another marker that they're using. The Fed is going to remain broadly accommodative until those statistics really come into play. And until then, I think there's a lot of hand-wringing and gnashing of teeth. I'm not sure it's going to signify a whole lot. So I tend to agree. I think that he's going to calm things down a little bit.
So what do you want to buy then? You're bullish on this market.
I'm bullish on equities. I really do think, for the individual investor, we've been saying this for a long time, but you have to be very careful in bond funds. Individual bonds is one thing, but bond funds, you have to be careful.
Outflows from bonds.
Outflows from bonds, because it's the first time in a while people have actually started to lose money.
Exactly.
So
the last 2 weeks was the biggest outflow since 2011. So
in
it's
bond
not
funds.
In bond funds. Yeah, no, it's been a big run for the exit recently.
Now, why are we so focused on Japan? It feels like the U.S. is tracking Japan tick by tick. And I know that, the Japanese market has not been investable in 20 years.
Well,
and all of a sudden this
it.
year, market's up 80%. So,
markets react to what's not priced in. And we've gotten so used to Japan doing nothing and disappointing that what was not priced in is them actually succeeding. And so, when Prime Minister Abe last fall, December, when he got into office, started launching his 3 arrows, monetary, reflation, fiscal reflation, and then structural reform, people thought, this is a big change. We didn't expect this. And so we've seen them expand the monetary base. The Central Bank of Japan's balance sheet, so the money they're printing, so to speak, has gone just from April to today from 60 trillion yen to almost 75 trillion yen in a month and a half. I mean, what they're doing makes the Fed look benign.
Right,
I mean, it's really extraordinary. So I think the market's paying attention to it because it wasn't expected. It's an extraordinary move, and Japan's still a big economy in the world. So if they can get growth back, that has positive trickle-down effects to all of us.
All right, we'll leave it there. Jason, Rebecca, good to see you both. Thanks very much.
Thanks.
So appreciate it. Jason Trenner, Rebecca Patterson. Up next on The Money, the Senate starts debate on an immigration reform bill that would provide a pathway to citizenship for 11 million illegal immigrants. I'll talk to a former technology CEO and an immigrant himself who explains why Washington's approach is all wrong. And later, is Google mapping a new path to get you what you want? How their major acquisition changes the road for navigation and the smartphone wars. Is it time to make a turn here? As we take a break, take a look at how the stock market ended the week. Back in a moment.
This bill would provide a pathway to earned citizenship for the 11 million individuals who are in this country illegally. So that pathway is arduous. It'll take at least 13 years before the vast majority of these individuals are able to even apply for citizenship.
That was President Obama urging Congress to pass the immigration reform bill being debated on the Senate floor this week. It's a hot-button issue that hits home for former AMD CEO Hector Ruiz. He used to cross the Mexican border daily to attend school here. Thanks to that education and his tenacity, Ruiz rose to become the fearless CEO of chipmaker AMD, and he is now known for his challenging its rival Intel in one of the largest antitrust suits ever. He details all of this and the epic fight in his incredible career in his new book, Slingshot.
One of the things that has been really important for me to understand, and I hope that book explains that a little bit, is that fair competition is an incredible source of innovation. And if you take fairness out of it, then you get what I call incremental innovation, which is good but not great. But if you keep fair competition in play, then it leads to really what I call transformational innovation. Things that really change an industry and transform it. And so the whole premise of the book really is to tell the story about what happens when fair competition is not at play. And I think personally one of the reasons perhaps that Intel is struggling today so much is because they were hurt as much as AMD was by not playing fair.
That is a great analysis, and you're right. You need a fair marketplace for the competition and the innovation to really thrive, actually. So let me ask you about the competition going on in technology today. I mean, a lot of people expecting that laptops, PCs are on their way out. We see what's going on with Dell. We see, you know, the mobility trend really overtaking the PC trend with everybody wanting devices. What does that do for the chip makers?
I think we're going to see a shift of value creation on chip makers. And probably a good example, if I could use this, is in the last 3 years or so, there has been this sea change towards mobility, where people want things they can carry with them, mobility. And so what that did is it shifted the opportunity to a company in Taiwan called TSMC, which is a manufacturing company, because they are the only ones that really were making the ARM-based products that are used in most mobile products. All of a sudden, they're just doing phenomenally. If you look at their market value, is almost the same as Intel's market value. And it just happened in the last 3 years, which means there was a shift in where the value is being created as a result of that shift in mobility. And I think we're going to see more of that going forward.
All right, I want to talk about your story because you really have an amazing story. You're from Mexico, and you used to cross the border every day as a child just to go to school in the United States. Tell us a bit about that.
Well, you know, first of all, I was so fortunate to live on a border where the American side of the border was so enlightened that, frankly, they invited Mexican students to come across and go to school. You probably wouldn't find that today. But so I was very fortunate to do that, and they allowed me to do that, and I was thrilled to have that opportunity. So with trepidation, as you could imagine, you know, as a child or as a young teenager, going across, but it was phenomenal, and I'm very grateful to the people that made that possible.
Let me ask you about the immigration part of this story, because there's a new bill in the Senate to provide provisional legal status to unauthorized immigrants. Now, this plan means it's going to take immigrants 13 years before they can apply for citizenship. Right now, it takes 2 to 4 years. Do you think this is the right approach?
No, I think it's terribly unfair for the 11 million people that are here already, that the vast majority of them are paying taxes, they're obeying the laws. And if you think about the fact that they're going to pay a fine, they're going to spend 10 years in probation and then 3 years more before they get a chance to do that, you know, you have to think of a very serious crime for somebody that can commit to have to pay that kind of a price. So I think it's an unfair situation.
Yeah, no, I think you're not alone in that, obviously. Let me ask you about this proposal to raise the cap on H-1B visas, temporary work visas given typically to high-skilled tech workers. Do you think we need to raise that cap? Do you find that you can find the skill sets required in workers when you're looking for employees?
I think the challenge we have, first of all, I'm probably the only one in Silicon Valley who doesn't agree with expanding the H-1B visa. I think is wrong-headed, and I think it's short-sighted. I really think we have hundreds of thousands of engineers here that need to be repurposed, and it would take some investment on the part of industry. Certainly, Bill Gates and Mark Zuckerberg have demonstrated you don't need a college degree to be in the software business. So we could do a lot with what we have here. And so I really am not so sure that that portion of the bill is critical.
Yeah, it really is. And I guess there is a real debate on that. Hector, it's great to have you on the program. Thank you so much.
Thank you, Maria.
Really
Appreciate
good to
it.
talk with you. Hector Ruiz joining us. Up next, we are on the money. What's the best way to get where you're going? We will take a look at why the smartphone industry is stopping for directions. And you can find us on Facebook/Maria Bartiromo. Well, you don't need a treasure map to find the latest billion-dollar prize in the technology industry. It's all about location, location, location. Search giant Google agreeing to pay more than $1 billion this week for social mapping application Waze, proving that navigation is a major target in the smartphone wars. Joining me right now is Joe Brown. He is New York editor for Wired magazine. Joe, it's good to have you on the program.
Nice to be here.
So let's first talk about the deal of the week. What is Waze? Why is mapping such a hot target right now for the smartphone business?
So Waze is a real-time mapping service, right? It's the kind of thing that shows you, don't get on the George Washington Bridge, it's totally jammed up, take the Holland instead. And the way it does that is with a really active community of about 50 million users who, according to Waze, submit almost 1 billion reports a month. And these reports say things like heavy traffic, accident, there's a speed trap here. Google's really interested in getting this kind of engagement from their users because it's very different from the way you use Google Maps on your smartphones. Google wants you to really love its products and use its products so they can advertise to you. And when you're talking about mobile advertisement, the big deal is you've got two factors. You want identity and you want location, because if it knows who you are, how old you are, what gender you are, and then it knows where you are, it can really target really effectively.
So what's the user experience like on these different applications? For example, the New York Stock Exchange at the corner of Wall Street and Broad.
Yep.
What does finding the NYSE look like on Waze, for example, or on Google Maps, on Apple Maps?
Well, one of the things that sets Waze apart from its competitors is it's very friendly. You know, when you send a report, you get points. It looks like a game. Your icon is a little cute little cloud-looking guy. And that's a lot different from the stark kind of utilitarian droplets you see on Google Maps and Apple Maps. So when you're navigating towards the NYSE, for example, it'll show you sort of a path in more of a 3D perspective to make you feel like you're more immersed.
And the drivers talk to each other.
Yeah.
You know, and that data is all very important information, and it's creating a whole like registry.
Yeah, because it basically, if I'm Google and I see that you're actually talking to my application, I know you're engaged, and I know that if I put an ad for, say, Dunkin' Donuts that's on your way, that you're going to actually see it.
Wow.
Because you're looking for those reports.
And yet, a lot of discussion about privacy in light
Sure.
of you know how technology is used. How are companies balancing protecting this information? I mean, the bottom line is you can be tracked anywhere you go. First, it was because you had Easy Pass.
Mm-hmm.
Everyone knew where you were. But now you've got a phone in your pocket. We could locate where you are in a nanosecond.
I'm sorry, if you use Google, you're being tracked.
Right.
And you're being tracked and you agreed to be tracked. You're being advertised against based on who you are. Their Google services are reading your emails. You know that because when you send a email to your mom about a rug, you get advertisements for a rug on the side of the email program, right? Like, this is nothing new.
That's scary.
But it's, you know, Google, you don't pay for Gmail, but it's not free. And you don't pay for Facebook, but it's not free. You are basically trading your identity and you're trading some manner of your privacy in order to use these services that you enjoy. And it's not the NSA listening, or it is, I guess, but Google has always been listening.
What do you think is the next big thing in the mobility story?
Well, it's what you were talking about.
Healthcare.
Yeah, healthcare.
I wrote an op-ed on LinkedIn about the marriage of healthcare and technology. This is fascinating what's happening.
It is, because wearable technology, like, you know, the Fitbit and the Whiting scales and the Jawbone Up, are allowing people to use these powerful computers in their pockets, their smartphones, to crunch some of the data they have from activity trackers. And they might not be 100% accurate, but they do give you a sense of what you need to do to stay healthy, right? And everybody's always wanting to stay healthy.
Yeah. Qualcomm has been riding the wave of mobility because
Yeah.
they make all the chips in
Right.
all of the devices that we love. And yet they are backing a clinical trial right now where you inject a substance into your bloodstream and it will alert you that you need to go to the doctor, you're about to have a heart attack. I mean, this is that the growth that is to come for smartphones? And is it going to be bigger than what we've seen in the consumer space?
That's a hard one to pin, you know, but the reality is that the smartphone, despite whatever app you have on it or whatever operating system you're using, the core of it is a very powerful computer that you can really bend to whatever purpose you want. And that's what the smartphone company, that's what the healthcare companies are able to take advantage of now. So the flexibility that it offers and, you know, the flexibility of interface with the touchscreen opens up more possibilities than we could ever think of.
Absolutely. Joe, great to have you on the program.
Thanks for having me.
Thank you so much for joining us. Joe Brown of Wired. Check out my op-ed on LinkedIn. Let me know what you think. Up next, a look at the news this upcoming week that will have an impact on your money. And then, think your job is boring? Well, one bank employee catching a few Z's at the office made $300 million mistake. Don't doze off. We'll be right back. For more on our show and our guests, check out the website, otm.cnbc.com. And I hope you'll follow me on Twitter and on Google+. Look for @Maria Bartiromo. First, though, here's a look at the stories coming up in the week ahead that may move the markets and impact your money this week. A few companies will report earnings, including FedEx, Oracle, and Adobe Systems, all reporting this week. Monday, world leaders will gather in Northern Ireland for the G8 summit. Then on Tuesday, we'll get the May Consumer Price Index that will be out for the month of May, as well as housing starts. Housing starts track new residential construction for the month. And the big story of the week, of course, happens on Tuesday. The FOMC kicks off the two-day meeting on monetary policy. Chairman Bernanke's news conference happens on Wednesday. Typically, that is a market mover. On Thursday, existing home sales are due out for the month of May. And finally today, a wake-up call for sleepy desk jockeys everywhere. A German bank employee fell asleep on his keyboard while making a €62 transfer from the account of a retired pensioner. With his finger on the number 2 key, the banker accidentally withdrew €222 million. That's about $295 million. Now, the bank corrected the error soon after it occurred last year, but a German labor court this week ruled that both the man and his supervisor, who verified the transaction, be reinstated in their jobs. Still, one very expensive nap. That'll do it for us for today. Thank you so much for joining me. My guest next week, the world's foremost female architect, Zaha Hadid, building up in London, Beijing, and beyond. Keep it right here each week where we are on the money. Have a great week, everybody, and happy Father's Day to all you dads out there. Have a great day. I'll see you next weekend.